Hi, my name's Alex and thanks for watching. So in my full-time job, I'm an investor and I've also been investing on my own personal account for over 10 years now. And the purpose of this video is to share with you some of the mistakes that you may be making but the professionals definitely aren't, and that may be stopping you from growing your portfolio massively. Now I can guarantee you one thing: if you take this on board, your net worth will be thanking you soon. I was inspired to start this YouTube channel after seeing a lot of other people on YouTube giving what I felt was fairly bad advice and who themselves were fairly inexperienced in investing. And so hopefully by creating this channel, by creating content on this channel, I'll be able to add to the community and help find other like-minded, passionate investors who want to analyse companies properly and in detail and make good long-term investments. Now if you find the video useful, please hit a like, please subscribe to the channel. I've got loads of exciting things coming soon. And also it lets me know if I should continue making this content or not. As well as the mistakes that you may be making, I will also give you one tip in this video that all professional investors do that will really help you in your investing journey. And if that wasn't enough, I'll also give you an investment theme that I think is worth looking into and researching at this point in time, and also one that's very hot on YouTube, which I think now is not worth pursuing. So let's get straight into the video. Number one is lack of patience. Now this is particularly difficult if you're new to investing. There's always the temptation to be checking your portfolio daily, hourly, but it's a bad habit. Stop. All professional investors go into each investment with a clearly defined time horizon in mind. The business will have been analysed very thoroughly, a strong level of conviction will have been developed on that investment thesis, and professional investors know exactly when they will exit that investment. Looking at the market daily, hourly, whatever it may be, too frequently is not helpful. It shouldn't change your investment judgment, provided that you put the right amount of research into the investment when you're making it. And so my advice here is, if you are having this problem, to delete the apps, to stop looking at your portfolio daily and trust your investment judgment that made you make that investment. Number two is taking unqualified advice. Now I see lots of people on YouTube who are fairly inexperienced in investing themselves, giving what I see as quite bad investing advice. Often they're no more qualified than anyone else who's new to investing would be if they also spent a couple of hours on Investopedia. Now this is not something that professional investors ever do. And if you want to make good investments as well, you should never do this either. By all means, use such videos as inspiration for investing ideas or for ideas for you to research further. But please never blindly follow the advice of someone who's not a qualified professional. And please always, always, always do your own research. Even highly qualified, highly experienced professional investors make mistakes as well. And my favourite example of this is Bessemer Venture Partners, a massive Silicon Valley venture capital investor who on their website have the anti-portfolio. Now I've listed that in the description below, but their anti-portfolio is a list of investments that they turned down or missed for various reasons. And this includes the likes of very early stage Facebook, Tesla, Apple, PayPal, the list goes on and on. But my favourite one of their examples is actually when their world-renowned VC investor David Cowan visited a friend's house. Now that friend was actually renting her garage to two university students who were starting a business and wanted to seek capital. Turned off by the idea, David Cowan actually asked how he could leave the house without going anywhere near the garage. Well, those college students in that garage turned out to be Larry Page and Sergey Brin, the founders of Google. So it just shows you everyone can get it wrong. Make sure you do your own research. Number three, getting too hung up on metrics and charts. All professional investors look at much, much more than just your dividend yield and your PE ratio. Yes, they are important, but there is so much more to this. Professional investors will spend many hours researching companies, researching theses, and preparing investment documents, covering every aspect of a company and the market before they make any investments. Now, if people are interested in how professional investors go about doing that, I'd be delighted to make a video on that process. And maybe if we ever have enough subscribers, we could do a live stream where everyone can get involved in the Q&A and we can work through that process together. Now this may be a slightly hard one to swallow, but if you're not prepared to put that hard work in, then maybe you're best off sticking to investing in indexes and other things that don't require the same level of research. And that leads me on quite nicely to point four, being lazy and not doing enough research. And this holds true whether you have invested into a company or you're looking at making an investment into a company. You can't be lazy. You have to read all the information that's available and you have to make your own decision on whether it's a sensible investment for you. If you don't do this, you're gambling, you're not investing. Now let me give you an example. This is a question that every professional investor would be able to answer about a company they've invested into. What would happen to our dividends if one of the competitors in the market decreased their prices by 10% and we had to do the same. Now, every professional investor could answer that question, and you should make sure that you've done the level of research in your companies that you are able to give a solid answer to that as well. Yes, it is hard work and you can't be lazy, because even once you've invested into a company, you should still be reading their quarterly reports, the 10Qs, the annual reports, 10Ks, investor presentations, other news releases to make sure you're on top of what the company is doing, how it's performing, and whether that changes any of the fundamentals as to why you invested in that business. Number 5, FOMO, fear of missing out. Look, it happens to everyone. It happens to professional investors all the time. It's happened to me in my professional career many times, where you may spend a lot of time researching a company, the market, everything around it, and you've got to the point where you have conviction on the investment thesis, and you go to invest in the company, and the price has gone above a level where you believe it makes sense to invest at. Professional investors at this point walk away. However, it's all too easy to get carried away and make an investment in that business. And this can be an absolute killer to your portfolio. What's even worse is where people get caught up in the FOMO and the hype that they've read online and invest into a company that they actually know absolutely nothing about. If you do this, you will definitely be damaging your portfolio returns. And believe me, as somebody who spent a lot of time researching opportunities, it's really annoying when this happens, but you have to maintain that discipline. So what is it that professional investors do that really very rarely retail investors do? And by retail investors, I mean you or I investing into public companies rather than institutional investors, funds, banks, etc. And this is thematic-based investing. Now let me break this down a little bit and put it into a live example for you. The COVID-19 health crisis has really disrupted a number of business models, and some of those, the disruption will be permanent. But what this has done, it's also created a large number of opportunities. And taking a thematic-based approach would look at those opportunities and look at markets where there will be significant growth over the coming years and try and identify attractive businesses to make an investment into. Now, all professional investors are doing this all the time, but I see very few retail investors doing this. And I guarantee if you take more of an approach like this, you'll see a real positive impact on your portfolio. Now, one example, and I'm not unique in this example, is telemedicine. I think it's undisputed that there'll be massive growth in this area in the coming years. Lockdown and social distancing measures have meant that a lot of doctors have conducted their routine checkups and appointments over video. And there's other technology-led solutions there, which also are interesting. This market will see massive growth over the coming years. And so finding a well-positioned business there with solid fundamentals could make a really exciting investment opportunity. And finally, one that I'm avoiding. Now, I know it's very popular on YouTube at the moment, but in my opinion, the video conferencing space is not an area that's interesting, and I'll not be investing into it at this point. And I say that for 3 main reasons. Number 1, timing. The boat has been missed here. Valuations are already too high, and my belief is we will see the share price of Zoom, for example, come down as we see some normality resume. Number 2, it's a really, really competitive sector with very limited barriers to entry. And what we're seeing is everyone coming to the market with an alternative. And we're investors, not gamblers. And we don't have a crystal ball to look into to tell us which of those will be the successful and leading player in the market. And to me, that gives more downside than upside. And given the nascency of the market, it's unclear to see how it will play out and how we pick the winner. And thirdly, I think the number of users is only going to decrease from here. Yes, I do believe that a lot of business will now continue to be done via video conferencing. However, personal communication, which has been done on Zoom and similar platforms, I believe will revert to being real life meetings, and as a result, a fall in the user base for some of these services. So that's it for this video. Thank you so much for watching. If you enjoyed it, please hit a like, please subscribe to the channel, and let me know if you have any questions, thoughts, or comments below. Thanks for watching.